What is good, NIO family? It's Rey-Jay back with another video, and in this one, we're going to be talking about the one and only NIO stock and what you should be looking out for the future. I'm also going to be giving you guys my price prediction for Monday and talk about where I think the share price is going to go, and not just Monday, but also the later days too. I'm going to talk about the CPI report that's coming out, how inflation may affect the economy for the next upcoming months and years, and what the Fed may end up doing that could actually have a very big effect on the stock market. Now, before I break any of this down, before I get into any more details, I do have to mention a couple of very important things. First, the first thing is I'm not a financial planner, so please don't take this as financial advice. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, benefits the entire NIO community as a whole. And the last thing is, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull with my link down below and deposit any amount of money, whether it's a $1 or $100, it's up to you. You are guaranteed 5 free stocks, each worth up to $2,000. Once again, that's free money, and you could always sell these 5 free stocks for whether it's $100 or $1,000, depending on the stocks you get. And you could buy some NIO shares for free. So this is a limited time offer that ends in just a week. To get your free NIO shares, please check it out if you want them. With that out of the way, let's get on with the video. So looking at NIO, obviously this company is a little bit in the red, but you guys could see something, okay? It's holding up way better than what it was like before. Like, if you look at the way this company was moving before, we are holding up quite well. And I do expect the stock to actually get a nice move to the upside for the, I would say, upcoming weeks. I also am very bullish for the long term, but for this week that's coming, for the next few days, I'm actually a little bit bearish. I'm going to show you guys exactly why. So looking at NIO, the way this thing is moving, many technical indicators are showing some bearish signals. Right here, the RSI, very oversold. MACD is continuing to drop. It didn't flip with the 9-day moving average or see that curl. And for the DMI, we're seeing something very similar, right? We're seeing the ADX continue to kind of drop, whereas we're not seeing that flip between the positive and negative lines, suggesting that this thing has room to keep on dropping. Now, this doesn't have to be 100% accurate. This just means that the trend is suggesting this. When the trend suggests this, look at how this moves. We go down, we have some green, maybe for a green day, then we go down, another green day, then we go down. That means that there could still be some green days here and there, but overall the trend is just showing us dropping and dropping and dropping. Now, we're currently holding the new level of support after filling that gap at around $20. And right now, I have to be real with you guys. Things are not looking great for the economy. On Tuesday, which would be April 12th, we have the CPI data coming out. CPI, for those of you who don't know, is the Consumer Price Index. It is the commonly accepted measure of inflation that a lot of investors use. Now, is it perfect? No. It's not the greatest way or most comprehensive way of measuring inflation from an economist lens, but not everyone in the stock market is an economist. And this is often accepted as the inflation rate or one of the better rates of inflation. And I think it has truth behind it, massive truth, which is why it's so accepted. And this could actually kind of show how things are going to really play out for the upcoming months. So remember, for the month of February, they reported this in March. For the month of February, the inflation rate or the CPI data showed about 7.9%, right? And the CPI data is now going to be coming out for the month of March. They're going to show it for the month of March. It's coming out on April 12th at 8:30 a.m. Eastern Time. So what do you guys think it's going to be? 7.9% or higher? And I'll be honest, I think it's going to be higher. I think it's going to be around 8.3% or higher. I mean, that's just my estimate. As we're still seeing the price of energy kind of soar, inflation does not seem like it's going down yet. And as a result of that, look at the charts, okay? We had 1.7% inflation, or at least the CPI data suggested this back in February of 2021, then 2.6%, then 4.2%, then 5%, 5.4%, 6.2%, 6.8%, 7, 7.5, 7.9. It's looking like we're headed towards above 8%, 8.3%, 8.4% maybe. Something has to be done quickly. I have to be real with you guys because inflation, it essentially represents the growth of an economy, but the growth of economies cannot be too fast. Economies have to slowly grow at around 2 to 2.5% in a healthy rate. And we're seeing it at almost 8%. That's not good. It's not good for your paychecks. It's technically a tax on the American people. The price of goods is just getting higher, and we're starting to see the Fed really step in. That's the reason why uh, we're seeing Brainerd, maybe Jerome Powell, starting to really step in and do something. They really need to from this point. They don't have a choice, and they're acting so slowly that they really let this get out of hand. And now we're seeing some articles saying, like, look, here's how the Fed raising interest rates can help get inflation lower and why it could fail. So it's not going to fail, right? It's there's so much FUD that's going to come out. But the next few weeks, there's going to be lots of FUD. There are going to be crazy articles. There's going to be lots of fear in the markets, which is why I'm bearish for next week. I have to be real with you. I just showed you the technical indicators that are showing that. And we got that 1348 EMA crossover back here. Now, this is typically late. What happened the last time we got it? Let me show you on the 2 hour. We were dropping. We started this upward trend. We got confirmation from the 1348. It's just a confirmation. It's not the perfect or the best indicator, but I'm just showing you another example. It stayed separate. The yellow and light green lines were separate for a long time. Then we started dropping, dropping, dropping. We got that crossover. Boom, bearish cycle starts. So I'm not saying this is a bear market that's going to last forever. I'm not saying it's going to last a month. I think just for the week or the next week and a half, we could see some bearish price action for the market collectively. And I would not be surprised if NIO's $20 level of support does not hold. So for Monday, it could really go either way on Monday. It is possible for us to actually run up a little bit, but even though that's a possibility, I think we're going to drop a little bit, and we may be trading the 20 to maybe 18.5 range, and we could continue to drop as the market starts to drop. It's very possible for NIO to start to fill this gap. I don't see it filling the entire way. That would be very surprising, but we could see this thing head to the $18 range relatively soon. I just want to put that number out there. We'll see how this thing goes, and if it does look like it's about to fill the gap, once again, I find that as very unlikely. But I'm also very calm because it's not the end of the world. It's not going to last forever. We have another gap up in 22, which shows, yeah, NIO is probably going to drop. It might be a big drop. I don't know how hard it's going to drop by. But once we get that drop, right, it's very possible for it to drop lower than some people think. If that happens, we're eventually going to get a bounce and we're going to make a comeback back to 22, perhaps within a few weeks, within a week or two, right? A fast recovery. And I think the entire market's going to do that because NIO has this gap that's also most likely going to get filled too. So we are heading back to $22 at least, perhaps in the next upcoming weeks, even after that downside. So like I said before, I don't see this as a long-term bear market. I just see it as a temporary drop followed by a good bounce and a bit of a recovery right after. That's my prediction. I told you guys that I see us trading perhaps in the $20 to $18 range very soon, maybe on Monday. And I just want to prepare you guys for that. So that's what I have for this video. I want to thank you all for listening. Please have a fantastic rest of the day, and I'll see you guys in the next one. NIO to the moon, because for the long term, I'm still very bullish despite this bearish price action. I do see this thing soaring, and this is not the end of the world if you are patient and a long term investor. NIO to the moon, and peace out.